Hi, I'm Dan Passarelli, and I'm happy to be here sharing some things that I'm looking at today and be able to maybe analyze some things that you might want me to look at. Um, let's kick it off by looking at the market. Whoops, looking at the market overall here. So, I won't go as far as saying a rocky start to the new year because, hey, we're only 2 days into it, and we're officially up on the year as of right now, but we are below this very, very key 50-day moving average. And if we close below it, that can act as some resistance. Now, to be fair, we have periods where we dip below it and come right back out of it, and some where it acts as support. In fact, just you can see here, we tested it and came back out of it. But the more days we have closing below it, the more likely it is to hold. So, one of the things that I am looking at right now is some covered call trades in my investing account. Now, I am going to be able to share some of those with you, but I actually chronicle all of my covered call cash secured put trades and rolls in my new Substack, and so I just wanted to share that with you, and I'm going to share that in the chat to everyone. That's my Substack, Wealth Building with Options, and I talk a great deal about um, covered calls and cash secured puts. All right, so one of the roles that I actually did a write up on. I've been writing up on this one for a while now, was an Apple. And Apple has been a challenging one for covered calls in the short term. And, that's the thing with covered calls. I was working with a one-on-one coaching student just yesterday, talking about just how humans' brains really are not wired to understand just the nature of statistics that is required for making it as a trader. And a lot of people who trade covered calls, they'll sell a call and the stock will go through their strike and they'll say, well, this is terrible. I'm leaving money on the table. I've got to buy the call back for a loser. And, they'll just give up on covered calls. Or maybe they'll roll it once and then, God forbid, it happens again, which it did this time for a couple of times in a row. It just went through my call strike, leaving money on the table, but still rolled up and out, up to a higher strike, out to a further out week, leaving money on the table because I had to buy the call back at a higher price again and again. But then you get these periods like we've had this week where, hey, I sold that call. I was able to buy it back for 3 cents and I got to keep all of that premium, which makes up for the small losses that occurred over this level. And then I get to just keep doing that again and again. And I mean, I've been rolling covered calls in Apple for a long, long time. And you can see this period here for about a good 5 months. It was a pretty darn good period to be rolling covered calls in Apple. So, I just kind of want to stress for those of you who do use options as an investing vehicle, as in, trading covered calls on your long-term holdings, not to be discouraged when you have periods like this where it busts through your strike. Those periods are where you give a little bit back, but in the long run, you just keep cranking it out. So that being said, that's what I cover to everybody in wealthbuildingwithoptions.substack.com. All right. The next thing I want to do is I want to share some credit spreads with you. And this is the credit spread finder that I developed. And it is an interesting one here in NVIDIA. Now, NVIDIA, let's take a look at that one. Whoop. NVDA. And we actually share when some of these credit spreads pop up on our scanners, we actually share those on the Substack feed as well. So this one, this morning, when NVIDIA was at $143 even, which was 9:50 Eastern time, 20 minutes after the market opened, somebody came in and they sold the 150 calls and bought the 151 calls. And as you can see here, that is very, very strong resistance, which is one of my top criteria for trading call credit spreads. I want to see that very strong resistance, and that's exactly what we get. Now, the person who made this trade, what we do with the scanner is we look for when a big professional trader makes these trades, we send them out to our subscribers. This one, the the trader collected just 26 cents, which, that's, I mean, it's 26% of the strike width. So, I mean, that's not bad. And he traded 289 of them, which, comes out to a potential profit of, let's see, 289 times 26 bucks. Yeah, I mean, 7,500 bucks, right? So not a huge trade by any stretch of the imagination, but a really, really smart strategic trade. But in order to get the 26 cents, this person had to go out to the regular January expiration, the monthlies, which is January 17th, which means NVIDIA can't make any new highs for the next 2 weeks. Now, I had a really strong day here in NVIDIA, up 4.5% just about. And that move, let's see here, and that is a bust up through the 50-day moving average. So resistance becomes support. And a lot of times we do get that follow through here, right? Here we tested it. It stayed below it for a bit. When it did bust above it, we had about 3 big up-day green candles. Here, actually, we didn't. Here we just had a little fizzle out and back down to test it. So the moral of the story is I kind of like this trade, and I like it even better now because the stock's $1.50 higher than it was when this trade was first put on. Now, what I really like to do is go back for a full year and look at that same data. And no, this was the all-time high here in NVIDIA. I think it was the all-time high. Let's just double check that. Yeah, it sure was. So this was the all-time high, as long as NVIDIA doesn't make new all-time highs. So for me, I look at that and I say, okay, well, let's take a look at what NVIDIA is doing right now. I've actually already got a trade on in NVIDIA, but this one could complement it pretty nicely. Geez, man, I could piggyback onto that trade. I could do it at a better price than they did this morning, 4 cents better. Or, you know what I can do is I can give myself just a little bit more wiggle room and do a strike higher instead and take in actually still just a little bit more than they did, which is about the route that I want to go on that. So for NVIDIA, I'm just going to go create duplicate order, and I'm going to send it mid-market. And if it fills, it fills. And if it doesn't, well, that's fine too. And there it is. So that actually kind of goes. Oh, no, I don't have a trade on NVIDIA. I'm sorry. I was thinking of a different stock. I was thinking of Palantir. Richard says, I've been writing calls on NVIDIA for the last 3 years. Go out 1 to 3 weeks, 10 points out, 15 or 20, never had to cover yet. That's good. And like I said before too, Richard, if you do have to cover and buy back the call at a lower price, is it the end of the world? Not really, right? I mean, if you've been doing that for the last 3 years, going out just 1, 2, or 3 weeks, and you never had to cover, I mean, yeah, it wouldn't be the end of the world if it whoopsie bounces up through one of the strikes at some point. No big deal. It sounds like you're still killing it pretty well, which is, again, that's such a key point to covered calls. So good. Yeah, thanks for sharing that, Richard. I appreciate it. So that is one trade. Let's see here. I want to look at now. Well, there was a covered call, or not a covered call, a credit spread trade in TSLA here. But geez, those are pretty Oh, wait, hold on a second. Let's go to the oh, this is the 6-month chart, isn't it? This one's pretty tricky because I mean this stock can just move like crazy. We got that massive move since the election, a little bit of a pullback, which of course is natural. This is clearly an overdone scenario, which is um, indicated by the RSI, just in case you couldn't tell that already just by looking at the darn chart. So I don't like to get involved with credit spreads on a crazy stock like Tesla. Now that's okay. MSTR. Thank you for asking about that one, because that one we also did have a call credit spread in. Let's take a look at that one. So MSTR, what the person did here is sold the 380 calls. Now these expire, these are the January 17th also. It's got to stay below 380 for the next 2 weeks. Now it's been below it for, let's see, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. That's 2 weeks, isn't it? In fact, that's more than 2 weeks because we had a couple of holidays, right? So not a bad trade. Uh, it would be a stronger trade if we could just close below that 50-day moving average. But, where is our resistance? I mean, we've definitely got resistance at 364-ish. We've definitely got strong resistance at, well, that's 387. That's still uh, above the strike price of this trade. So let's see. They put that trade on when the stock was at 334.64. Now it's actually $5 higher. So here's one of those scenarios where I would be much more comfortable if I could sell the 400 strike. We've got much, much more resistance there. We've got the par level, which is kind of not an official par is typically 100, but whenever it's a multiple of 100, traders tend to call that par as well. Whenever we got that, 100, 200, 300, 400, those act as support levels or resistance levels as well. Resistance in this case. So since we're $5 higher, what I want to do is I just want to take a look and say, hey, you know what? Would I be able to sell, not take in more premium, but sell at a higher strike this trade? I'm going to have to go 2 weeks out. And wow, the answer is yes. Take a look at this. Could sell that there and that there. I collect 12% of the strike width. That's a little less than I like, but it's doable. This is one where I would be a lot more conservative on. I'm just going to do a little dabble trade here. Create duplicate order. How am I doing on time here? Halfway through? Okay, I'm doing good. And, we got to give the market makers, well, hold on a second. Got to give the market makers their due, but we want to squeeze them for as much as we can. I get it? No. Great. No. Cancel replace. And I wouldn't go too much lower than this. I'd go to 122, but I wouldn't sell it for any less than that for sure. I'll let that order sit out there. If I don't get it, I'm completely fine with that. Um, ooh, you guys are really giving me some good ones to look at here. Hey, by the way, give me a yes or a no. Do you trade credit spreads? Yes or no? Or just Y for yes, N for no. Do you trade credit spreads? I got a yes. I got a no. I got a no. Come on. Everybody give me some feedback here. It'll help me. Yes. Okay. No. Okay. Yes. Okay. So we're kind of half and half here. Um, I'll tell you what. Um, Let me just give you one more thing here. This is free. Um, this is an ebook on trading credit spreads. It's a great introduction, but there's also some more information there for people who are experienced. So grab that as well. But let's take a look at, let's get this filter off here. Oh, we don't have it on there. It's on the Analyze tab. Let's get rid of that filter. And somebody wanted to look at CRNC. Now I look at this and the markets aren't that, whoa, markets aren't that wide. So I'm okay with it. Um, what is going on here? They're giving me some pretty weird strikes here. What's going on? The highest strike they have is the 15 strike. This is not a stock that I follow, but there's something strange going on. Is this one oh, I see. Yeah, well, we don't want to be looking at credit spreads in that one either. For sure. That one, let me just check something here. Another thing that market taker studies is short squeezes. And I'm not sure if that's what this is, CRNC. It could be. It's got a short interest of 18.29%, last updated. Artificial intelligence. Uh, yeah. I mean, it's a company that's losing money. Short squeezes are a lot better when there's a high short interest, but the company actually makes money. This one does not make money from my first glance at it. I'd have to study it a little bit closer before confirming that. But yeah, this is definitely not one that we would want to be doing credit spreads on. Credit spreads have limited profit potential and you can lose more than you can make on them. And when something just moves this much, you don't want to get involved in that. So yeah, I'm going to have to add this one to our basket though. Oops. So let me just get a quick little pick of this one so that I can add that to our short squeeze basket later. Okay. All right. See you, Richard. KIT. KITT, rather. Nauticus Robotics has no options. Well, I mean, I'm an options guy. Uh, is this another short squeeze one? One way to find out. KITT. Yeah, this is not a short squeeze trade, so there must be some news on it. There's only 8% of the float being shorted. So I don't know what the news is here. Um, oh, there we go. I filled on that MSTR. There's some news, and I would have to kind of read through this, which nobody here on this webinar wants me to do. I'll have to look at this one a little bit closer later. Definitely, clearly not a short squeeze. It is a news trade, so we'd have to do a little bit of research on that. Loco. Presume you want to look at the stock Loco, and you're not calling me Loco. El Polo Loco Holdings. I just had El Pollo Loco for the first time in my life, like about a month ago, and it's kind of delicious. It kind of is. I mean, as far as cheap fast food goes, it wasn't too bad. I recommend it. I don't know if I recommend the stock. We're kind of in a bit of a downtrend here, but the chicken's pretty darn good. Okay, so this one might lend itself really, really well to a credit spread. I just want to see if it actually did hit our scanner. Probably didn't, but I do want to look at the options markets. Excuse me, are kind of wide, not dreadful, but I'd like to see them a little bit tighter. So what we have here is like this is, it made a little peak here that we call a high, but it's lower than the last high. And here's a high that's lower than the last high. Here's a high that's lower than the last high. This one is kind of tied, but this is what we call lower highs. And if you look at the lows, well, this one was a pretty low, but here we have a low that's lower than this low. It's not a perfect example of lower lows. It might be more like a bit of a triangle forming, which could indicate a breakout or a breakdown. We're down below the 200-day moving average on this puppy. So that is support becoming resistance. If I were to even look at a credit spread on this one, first of all, I'm not in love with it because the bid-ask spreads are pretty wide on this one. But I'll entertain it. And it's only an $11 stock, so you're probably not going to get enough for a credit spread. I don't know, like as an options trader, there's not a whole bunch we can do on this one. But if I were to do something, I'd be looking for a call credit spread. Our first resistance level really is at about $12, which is 4% higher. I'd really love to sell at higher level, but we're limited to what's available here. Over the next 14 days, I mean, we can't sell the 12, we can't even sell the 12 strike. It's a nickel bid. And I sure wouldn't want to go out 49 days selling the 12 strike. So, I mean, there's nothing we can do on that one. I mean, if anything, we could continue playing the weakness on it. It's not in an oversold state given the RSI. So I don't know. I don't have a whole lot of conviction on this. The only thing that I could kind of pull out of the air here is maybe buying puts, but I'm not going to do it. So sorry, Tessier. Let's see here. Mara. I was waiting for somebody to ask for that one. Mara. This is the last one we're going to have time to look at. Holy moly, this puppy has been really heading south here since end of November. Oh my goodness. But we did bust back above that 200-day moving average. We just go back and we see the 200-day moving average. It went from support to resistance here, really held until it busted through, and then we got some follow through. We're going to need one more candle on this one, but then, we've got the 50-day moving average sitting here as well, and the 21-day moving average about to cross down below the 50-day moving average unless we get some momentum in short order here. So, this is kind of a tough one too. I would look towards selling a put credit spread on this one, but again, $19 stock, it's pretty tough. I don't need all here, do I? Uh, I would keep it as short term as possible. I mean, I guess I could theoretically sell the 18 strike, but we were down below the 18 strike yesterday. So there's really not a lot from an option standpoint that we can do there, especially when it comes to credit spreads. Um, Sorry, Bob. Um, if we're looking more towards, if we're looking towards a breakout, I would wait for one more candle on this. If it closes today above the 200-day moving average, and then again tomorrow above the 200-day moving average, which is this red line, I would be comfortable playing some momentum in there. We've got nice tight markets here. I would play it. Now, the historical volatility is about 95. So we can actually buy some slightly underpriced options. Holy cow. I would probably just come in here and buy like the 20 strike calls. Yeah, I would watch this. I'm saying tomorrow, but I mean Monday, next trading session. Uh, Keep an eye on this one for Monday. If we close above the red line today and we open above it on Monday, these 20 strike calls are going to be a steal. Okay, that being said, folks, boy, I ran out of time. I hope I was able to get to everybody's questions and such. I hope it provided some good value to you. Hope you follow me on Substack, which I posted that in here. And if you're interested in credit spreads, you grab that guide that I posted there. And you can always find me at markettaker.com. Glad to help any way I can.